Good morning, it's Joe Neighbour from Signal Centre. This is the latest roundup on the FX markets for you today from a technical perspective. Just a quick roundup, first of all, on the latest news. Yesterday we had the Federal Reserve speaking and the press conference as well, and their battle against the rising inflation over in the US intensified yesterday. It's currently at its highest level in a generation, and as a result of that, we've seen the Federal Reserve end their asset buying program earlier than expected, and they're also signalling that they favour raising interest rates in 2022 at a faster pace. The quicker pullback puts the Fed Chair Jerome Powell in a position to raise rates earlier than previously anticipated and counter price pressures if necessary. Obviously keeping a close eye on what goes on with the pandemic at the same time. So what did that mean yesterday for the dollar index? Well, it was quite an interesting move. Those that have been watching my videos will know that I have a bullish outlook when it comes to dollar index and expecting to see higher prices. We continue to trade within this bullish channel, but in recent sessions we've started to form a consolidation triangle or a pennant formation on the daily chart. And what I was hoping to see was a break to the upside to signal a continuation higher in price. So we actually got that. Just there, as you can see on the 14th of December, we posted a strong close above the pennant, and that looked to be an indication that higher prices were set to be seen in the short term. We then saw quite a significant push to the upside yesterday in early trade, which really was a confirmation that we were seeing appetite for buying. But that was swiftly reversed off the back of the FOMC meeting and statement, and we actually saw quite a significant reversal candle take shape yesterday, engulfing all of the previous body of the candle on the previous session, posting highs and then closing on the low. So that's not a particularly strong sign. It indicates that we've seen maybe a false move to the upside there. We are backing that up today with further losses. We're down by 0.1% so far on the dollar index today, back within that pennant formation. So it remains to be seen whether we're actually going to see a break to the downside now, and we're actually going to see a follow through on this reversal that we posted yesterday. There is a number of data points out today as well that we need to be aware of, which could have an impact on financial markets today. If we do get a break to the downside here on the dollar index, then for me, I'd be looking for a correction down to this kind of level here. I've got a rectangular formation or shape drawn on the chart. What we have here is a confluence of support levels. So we've got a 38.2% fib level at 94.47. We've got a horizontal support line in the form of this blue line here, which is relevant because it's this previous swing high back here from in September. And we've also got this uptrend channel, or this support, the support of the lower end of this bullish channel, which could potentially do a job as well. So down to this sort of region, we could see a correction in dollar index, and for me, that would be quite a healthy pullback really in the grand scheme of things, and would allow for fresh buying appetite to maybe return to the dollar and for higher prices to be seen over the more medium to long term. But in the short term, the outlook looks a little bit choppy for the dollar index, and we could see a move lower. So obviously that's going to have an impact on euro dollar, because it's the flip side typically of what we see on the dollar index chart. As you can see here, we are trading in quite a significant and persistent downtrend in euro US dollar. We are also maybe forming some sort of pennant shape on the daily chart here. We haven't really seen a breakout in either direction on this just yet. Yesterday we did see a move to the downside in conjunction with that move higher on the dollar index, which was then reversed, and it's a similar situation here. The move was reversed on euro US dollar. We posted a positive session yesterday, and we're seeing a bit of strength today. If we get a break out of this pennant to the upside, then we could see a correction take shape over the very short term, and it may be favourable conditions for people to buy euro US dollar in the short term. I'd be looking for a move maybe up to around about 115.25, which is this blue line, horizontal line, and also probably going to marry up with this downtrend resistance line that we've got on euro US dollar as well. So what we're seeing at the moment as a result of the Federal Reserve action yesterday is a return to riskier assets. So people in the markets appear to be hungry for riskier assets, and that is typically what you see at this time of year as we start to slow down for the festive period, particularly in Europe and in the US. We start to see less participation, and we can start to see a grind higher in the riskier assets over this festive period. So maybe that's what we're going to see, a little bit of a grind higher to the upside in euro US dollar and a grind lower in the dollar index. So yeah, that's pretty much it on the technicals for these two major markets, and you can pretty much plan most of what else you want to do on the currency side of things by taking a good detailed look at these markets. Be aware of the data that's out today. 12 p.m. UK time, we've got the Bank of England rate decision. No change in rates expected, as there is a return, obviously, of COVID restrictions in many countries, the UK being one of them, and that could, of course, have an impact on the economy. So therefore, it may mean that the Bank of England actually take no action today. Following that, we've got at 12:45 the ECB rate decision, and then we've got the press conference at 1:30. Again, no change in rates expected, but we are all waiting to see what is being said on the commentary side of things and what that could indicate for further bank action into the new year. So be careful if you're trading today. Some really important data points out. Looking at the charts, it seems to be that there is more of an appetite for riskier positions at the moment as we go into the Christmas period, but that could all change based on today's meetings and outcomes. Good luck, everybody. I'll be back next week. Until then, trade safe. Goodbye.